All right. Well, good morning, everybody. It's 10 o'clock on Friday morning. Glad everybody could join us. I hope everybody's looking forward to the Memorial Day weekend this weekend, and hopefully everybody's getting some rain. I know some have gotten more than others, and some still need some, and some places of Texas are pretty wet, but hopefully everybody's getting some. If you're joining us this morning, obviously you are in the Texas the sheep and goat market webinar. We're starting here at 10, going to be about an hour. We welcome y'all to this. This is part of our Texas Sheep and Goat Expo mini series. A lot of y'all are probably in one or both of the sessions we had back earlier in the year with some good topics. And so this is the third one we've had, and we plan to have some more coming up this spring leading up to our Texas Sheep and Goat Expo. Speaking of the Texas Sheep and Goat Expo, this year, I hope everybody's got it on their calendars. If not, we'll give you those dates to put on there. Our expo will be August 20th and 21st here in San Angelo, Texas. That's a Friday and Saturday. That will follow our Sheep and Goat Field Day that starts Friday morning at our research center. This year, everybody's excited. It will be live and in person here at the San Angelo Stock Show and Rodeo Fairgrounds, and the expo will be in the First Community Federal Credit Union Spur Arena, which a lot of people are familiar. It's climate controlled, really nice facility. So we hope you mark your calendars for that. Today's webinar is just kind of a precursor to the expo, kind of give you a taste of what you're going to see. All of y'all have been following the sheep and goat markets this year. We've had a few swings, but ultimately the prices have been very strong and very good, very favorable to the sheep and goat producer. And so that's the purpose of today's webinar, is kind of talk about those markets, what's driving them, what we can look forward to, and give you some more insight into that today. This session is being recorded right now, and so if you've registered for this, as soon as we have that recording processed, we'll send you to the link to that so you can get back on and go back and review any of the information you may have missed or needed additional clarification on. Listen to it again, you can listen to that. We will mute everybody's mic during the program and turn off their cameras just for streams a little easier. If you have questions, feel free to put those in the chat box. We'll be monitoring that throughout the program. And at the end of the program, we'll allow you, if you want to ask your question over the mic to the speakers, we'll allow you to do that. So to go ahead and move on, I will go ahead and introduce Dr. Reed Redden. Dr. Redden is our Texas Sheep and Goat specialist based here out of the San Angelo Research and Extension Center. And he's also now the center director here in San Angelo. So we congratulate him on that. And I'll go ahead and hand it over to Dr. Redden.
Thank you, Josh. Appreciate that introduction. Looking forward to our expo coming up this summer. Looking forward to get back and being live in person. So a few weeks ago, we were chatting a little bit, and I thought, well, there's a lot going on with the sheep and goat markets. Supply is changing this time of year. Supply is coming up. We just got past a holiday season and some things have been going on. The markets have been fantastic, but people are asking the question, how long is this going to stick around? And I think if anybody had a crystal ball and knew what that was, they could probably make a lot of money off of it. So I doubt Dr. Anderson or Benavidez are going to stick their neck out so much and tell us exactly what it's going to do, but maybe give us some hints of what's going on in the market. So fortunate to have some economists here in the state of Texas that keep an eye on the sheep and goat industry, and we've broken that up a little bit. Dr. Anderson's going to give us a bit of an update of the traditional industry. I think Dr. Benavidez is going to touch on some of the non-traditional parts. I'm going to be your moderator here. If you have questions, please put them in the chat, and I'll try to direct those to our speakers, and we'll go from there. So with no further ado, Dr. David Anderson, I believe you're up. If you want to go ahead and share your screen, please do so. And we'll turn it over. So we're seeing your screen.
There we go.
There we go.
How's that?
Perfect.
All right. Well, thank you, Reed. I appreciate the opportunity to be with you guys today, and thanks for putting this together. I think it's a pretty timely idea because there's sure a lot of interesting stuff going on, and prices have been really amazingly high. And so I think, I really appreciate the opportunity to get to spend a little bit of time on this. I will focus a little on more on the traditional market and some of the bigger picture things. I want to hit in our time here really about three sort of areas here. One is, the first one is total lamb supplies. I think we can kind of think about the total supplies on our market. And I think it puts some of the prices we're seeing in some context that's pretty important. And I think that really guides us towards, can these high prices remain? And so I want to hit on that a little bit as well, and draw a little bit of this idea of total supplies and future supplies with our total flock inventory as well, and a little bit on prices, which will get us to a couple of comments about demand. And I think this and what my colleague Justin Benavidez is going to talk about ought to dovetail pretty nicely. And so with that, we'll jump in. I really want to focus in terms of supplies kind of on, I'm going to use two charts. And the first one is cold storage. And that's the amount of lamb and mutton we have in really refrigerated warehouse freezers. We can think about that as sort of being our pipeline supplies, the stuff that's going from the packing plant through storage and going to restaurants and grocery stores and all of those hotel, restaurant, institutional trade, the HRI trade that we have. And I think one of the first most important things here about cold storage is we've certainly had times in the past where we had way too much in cold storage. Take a look at that dotted line being 2020, and look last year at about this time, we had more than a quarter, almost a half a year's production sitting there in cold storage. And that stuff, the product's got to go somewhere. It can't sit there forever. Certainly meat has some storage to it, but it's not, certainly a long-term storable product. So I think one of the things that's really helping the market out is this really extremely low, relatively low cold storage stocks, particularly related to the last 5-year average, which is the red line, certainly where we were last year. So if we think about having really big supplies on our market, we haven't had a lot in storage. And I think that's one of the real positive parts in terms of supplies in our markets. And I think that's one that's worth noting, is that we don't have these really large, burdensome supplies on our market. And if we think about seasonality of production, when we normally have shorter supplies, we don't have a whole lot of stocks there. So I think that argues from a supply standpoint for some support for lamb prices going forward. I think the other big part of supplies that we talk a lot about is really imports, because we know at times in our past we've been flooded with imports, and it's really driven our prices down. And when I look at this chart and I look at March and this real sharp spike in imports from February to March in 2021 this year, really normally we see a spike in imports, and that's really imported product coming in to hit those springtime holiday demand that we have. That's really, normally we think of as a good part of our market. Well, foreign lamb sees that as a pretty attractive market too. And so we get more imports really to feed that demand. And so while we certainly saw an increase in imports in March from February, if we look at the year so far, our imports are down below a year ago. And so, actually in the first quarter, our imports were down about 12% of lamb. One of the interesting things in the broader lamb and mutton market, we actually imported a lot of mutton products last year. And so far this year, our imports of that are down 62%. Our lamb imports are actually down about 12%. So we've got less imports, we've got less in cold storage, and so we've got less on our market. If I took a look at this total supplies, and total supplies are really our cold storage stocks, imports, and what we produce ourselves, our own domestic production in the first quarter this year, we actually produced a little more lamb than we did last year. My projections for the rest of the year is we're going to produce a little more lamb domestically this year than last year. But if we combine it with our imports and what we have on hand in the pipeline, the first quarter of this year, our lamb total available supplies were down 25% from last year. So if you think about lamb, our total supplies being down 25%, that's a huge year-over-year change. And I think that available supply story is a big part of this of our picture of why we see prices where we are. It's because we got really tight supplies. If I look forward going to imports, our prices right now are such that, and I'll come back to this again at the end, but I think our prices are such that we're going to be an attractive market to foreign lamb sources, Australia and New Zealand. If we look at our imports this year, our imports from New Zealand are up just slightly, but our imports from Australia are down about 17%. And they've got some production constraints from drought to rebuilding flocks to, other attractive markets to send product to that's kind of withheld some of those, that movement of product this way. But, those high prices here in the U.S. probably attract some more imports over time as we go through this year and into next year. But, I would suspect that for our total year, my projections would have that we're going to continue to see less supplies on our market. If we look at an annual average, I expect supplies to be down when we look back on the year 2021, that we will have had about 12% less lamb on our market than we did last year. And I think that adds to some support for lamb prices over the next couple of years. I mean, certainly through 2021 and into 2022 as well. Now, one of the things high prices ought to do is it ought to encourage us to expand, to increase our flocks a little bit. I think one of the things in flock inventory that's pretty darn interesting is the number of mature sheep that we're sending to slaughter. So this chart is our weekly federally inspected slaughter. Again, that red line is a 5-year average. The dotted line is last year. The blue line is this year. I think one of the interesting things in the market, high prices ought to be encouraging us to start to build our flocks a little bit. But high prices also encourage us to maybe move some more animals to market because the price is good. So we always have in livestock markets this kind of tug of war right away with high prices, encouraging longer term increasing supplies, but also a little pressure early on. So I think our mature sheep slaughter is a pretty interesting kind of look at it, and maintaining this kind of year over year growth would certainly imply that there might not be there's not much movement in terms of building flocks apparent yet in the at least in this mature sheep side. Some of you may know that over the years Mexico has been an outlet for cull ewes. If we look at some of the live animal exports, our sheep exports are actually the highest in the first quarter since 2011. So really the highest in a decade. In the first quarter, we shipped almost 21,000 head out of the country. But actually, if we dig into the statistics, most of those went to Canada, not that old traditional market for cull ewes of going to Mexico. So I think this is something I keep an eye on in terms of, are we building flocks and what's that speed of expansion given these high prices? This would certainly argue for restraining domestic production in the future and probably add some more fuel to kind of a supportive argument for prices. I thought I would put this in just because we can't avoid it, it seems like. But, I'm using the drought monitor map to really just again highlight. Most of us know these areas of drought. We certainly had some retreat in drought areas in Texas anyway, just with these storms that we've had over the last 2 or 3 weeks. But, as we look at where drought is and where drought has gotten worse and worse, does that fuel some of our ability in the West to expand flocks? It very well might. Now, we might look at some other data, some vegetative indexes, some other drought indices, some longer term things that might give us a little bit different picture on available, pasture range forage supplies and whatnot. But certainly, we've got a big area of the country that is in some drought and is struggling pretty mightily. And so does that fuel some more movement of animals or restrict our ability to expand? It very well might. And so I would, keep this in mind as well, because, it is early and we're not even to summer yet. And so, we could certainly see some expansion into more areas and those other areas in worse and worse problems. I got two price charts. One, just out of completeness, I included a slaughter lamb price, Wold, Sioux Falls, just to certainly show this increase in, certainly the price levels where we are, but in these heavier weight Wold lambs, slaughter weight lambs, really rising seasonally. Our level is higher than it was versus the 5-year average, but certainly moving higher seasonally as well. And that's certainly a longer term seasonal pattern that we see. And we're following that pattern, albeit at higher levels. And of course, you can compare to 2020 and the whatever we call the mess we've been in for the last year and a half. I'll just leave that there for comparison. But even if we think about longer term seasonal patterns, we're moving higher seasonally. And prices do tend to trail off later in the year, just seasonally. I want to close with, at least in terms of charts, really our wholesale market or the national lamb cutout value. So really the wholesale value of these primal cuts. And so if we're looking at this at our wholesale market that's going into hotels, restaurants, grocery stores, and the like, we have rising prices, shockingly high prices, we might say. And it doesn't matter what primal cut I pull out. If I wanted to look at legs, racks, loins, shoulders, prices are higher across the board. But, if we put that in the context of 25% less supplies available in the first quarter of this year, gosh, that's a pretty big change. And certainly, I think drives prices, certainly provides support for prices being higher. High prices do two things. It ought to encourage some longer term production increases, but it also ought to discourage demand. I think one of the interesting things about lamb demand is I think we would all argue that over the last year and a half, it's been very positive. People buying at the grocery store, at home, trying new things. And I think lamb has benefited from that. If we looked at some of the retail price data, lamb prices at retail, we moved a lot of lamb, but we also moved it at some specials and at some lower prices to keep it competitive. So one of the things I certainly would hope that we would see with a growing economy, falling unemployment, growth in whether we, GDP, whatever measure you want to use, that we can continue to fuel some of this demand growth that we've seen. I do suspect that higher prices will pressure some of that quantity demanded kind of growth as we go along. But all in all, I think, if I was going to kind of summarize this, we got sharply lower supplies. While our domestic production is up, we're getting sharply less supplies from imports and stocks. I do think we'll get some more imports just because at these kinds of prices, this is an attractive destination. We got some new packing capacity. We've got restaurant and economic recovery going on. All of those are I think all of this is supportive of overall some good lamb prices going forward. I do think that, high prices tend to moderate. They say the surest cure for high prices is high prices. And so I do expect that we'll see some of that to moderate these prices, yet still leave us in an area where we're going to say, these prices based on supplies and good economic growth for some positive news on lamb prices going forward. And that's my last slide. So with that, I'm going to try to quit sharing my screen and turn it over back to Reed and to introduce my colleague.
All right. Thank you, Dr. Anderson. That was very good. Some pretty good outlooks for the markets here. I did see one question in the chat here from Richard Shunky. I think as we've done this in the past and Dr. Anderson steps off and someone speaks, he does a really good job of jumping in the chat and answering some of those. So for the sake of time,
I'll just type in some answers if that's good for you, Reed.
Yeah, that'd be perfect. So
cool.
You answer those in the chat. And if anybody saw those questions and interested in the response, stay tuned to that. and then we will roll right in and have Dr. Benavidez talk a little bit about the non-traditional lamb goat markets, and he's probably going to share some of the charts. If you're not aware, we have some market reports, summaries that are put together that are shared on our website here at sanangelo.tamu.edu. I'll put that link in the chat box here. And Dr. Benavidez has been so kind to keep those charts going since Mr. Bill Thompson, who recently retired, had got those started. But with that and no further ado, Justin, you want to take it over from here?
Sounds great. Thank you, Reed. Yeah, as Reed said, I'm probably a newer face to the sheep and goat crowd than David. I'm a new district economist up here in Amarillo, and as Bill Thompson retired, I've taken over some of those responsibilities and learning a lot from David, learned a lot from Bill. And so as we're moving forward, yeah, feel free to drop any more of those questions in the chat. As Reed said, I'm going to focus a little bit more on the non-traditional lamb and then the goat market. So we'll go ahead and dive in. So on the non-traditional side, or focusing a little bit more on the San Angelo market in particular, those dynamics and those fundamentals that David mentioned when he was talking kind of about the market at large have really carried into the San Angelo market there. We track those prices weekly, and you can see here that those high prices have carried into the market there locally. And we're looking at somewhere about 60 cents over on average the prices we would have seen in 2020. Obviously, there were some interesting dynamics caused by COVID-19 there in April and May, but in general, prices are following their typical seasonal pattern, though at a much higher rate. And it's because, again, of that fundamentally lower supply on some potentially increasing demand that David mentioned. I think one thing that's interesting is again, being relatively new to the sheep and goat market side, I've just been fascinated to look at how precipitously the number of sheep in the U.S. herd has dropped and declined. If you look at a supply chart of the number of sheep in the U.S. herd, we're at the lowest levels in decades, and I think that kind of points to those things that David was discussing of once we reach this certain low end threshold, we've got a critical mass of ewes that after a certain point, it's going to take us a little while to rebuild that herd. And so I think that's positive, again, as David said, for the prices going forward, not only in the traditional, but the non-traditional market, because as we've got a lower number of ewes, it's going to take us a little while to build those ewe stocks back up, and therefore to build lamb stocks back up in a way that would impact or lower prices. So focusing a little bit on the traditional versus what we would call the non-traditional market, kind of the direct to slaughter versus going through that feeding channel. We can see that those fundamentals that David discussed are largely going to track from the traditional side to the non-traditional side. And obviously there are some discrepancies in when a lamb is slaughtered, after how long it's been fattened, and what is considered traditional versus non-traditional. But in general, the prices, I would argue, are what dictate the end use for those lamb products, right? So if we see a really high price in the non-traditional market that is not being achieved in the traditional market, we're probably going to see some more lambs directed at that end use that's non-traditional versus traditional, that ends up over time keeping the prices tracking with each other pretty well, correlating strongly, even though they don't always necessarily have the exact same price. You can see they move in tandem, and sometimes the non-traditional market is going to be higher, the traditional market is going to be higher, and it kind of just depends on movement in the market at the time and where those prices are pulling production towards. One thing that David mentioned that I think is pretty interesting, that might be suggesting some more non-traditional slaughter and be a function of several back end forces in the market, is this lamb and yearling dressed weight. So if we look year over year compared to 2020, lamb and yearling dressed weights are down year over year. And so that suggests that lambs that are going on feed are staying on feed for a little bit shorter period, achieving lower weights in general. That's a function of several different forces, but also, I would suggest and theorize that if some of these lambs that were going historically to a traditional market are now being outcompeted in the non-traditional market by some increased prices for direct to slaughter lambs, that's going to encourage, smaller lambs going into the non-traditional market, pulling more of that production towards that end use, which is going to indirectly affect the price and therefore the weights we're able to achieve in that traditional market, which here we're seeing that federally inspected slaughter being pulled down in terms of weights. So there's some other forces that are driving this. As David pointed out, several of those larger fundamental market forces are pulling more lamb consumption. And I, for the first time, was able to cook some lamb at home during the pandemic. Had a great eating experience. I made some shawarma that I tried to make out of a leg of lamb, and it was great. My next project is going to be to try to do, a rack, but I need to find some people to cook for. So in general, I think some of that consumption is pulling production through the processing chain faster. And so it's more economical for people to sell lambs at a lower weight. And therefore these dress weights are going down. And we're probably mirroring that in the non-traditional market with those two forces kind of talking back and forth to each other. But one of the things that is pretty apparently leading to lower dressed weights and probably a little bit of more animals leaving the feeding traditional sector and going into maybe a non-traditional sector with prices increasing there are Southern Plains corn prices or corn prices in the US in general. And so you can just imagine this as a pretty good map of what the prices for corn are doing across the entire United States and the world. We've seen huge increases in the price of grains since basically July of last year. I gave a corn outlook to a group of economists in July, and I said I saw no reason for the price of corn on the board to go above $4 for the December delivery. And here we are beginning to push $7. So a lot of these fundamental reopening forces, the fact that we have at least reported low corn stocks that are pushing that 40 days of use on hand value that is pretty critical in the corn market in terms of being able to get harvested corn from where it is to where it needs to be, is leading to high grain prices across the board. So it's not just corn, it's also wheat, sorghum. Basically, the entire crop complex has seen a really high spike in prices. And so this would also influence some of those traditional lamb markets that we're placing lambs on feed in to feed them for a shorter amount of time. And if this is eating into that profit margin for lamb feeders, we might see some of those lambs that would normally go into a traditional market moving more into a non-traditional setting, since they don't necessarily have to be fed as long or fed at all. And so this is going to be a pretty strong force in any of our livestock sectors for the next year and potentially two. Moving briefly on to goats, the story is very similar. The goat market is arguably performing even better and seeing even more support than the sheep market is. We're at a low inventory of goats as well. That historic data series does not go as far back as the sheep series does, but what you can see here is that we are at a comparatively low inventory of goats, and these are a little bit more difficult to track. There's some issues with porous data because not as many people report their goat production as we see in other livestock species, because you can have 5 or 10 goats in your backyard and not necessarily consider yourself a farmer who reports to USDA. And so there is probably a little bit of discrepancies in this data, but the story still holds in that inventories are lower. And as we see that lower inventory with increased demand or even constant demand for goat products, we're going to see higher prices. And that bears out when we look at that local price for weighted average price for all kids in San Angelo. We have broken out well above the historic prices that we would expect, that we would have seen in the last 2 years. And the fundamentals do not dictate that those prices are going to fall back anytime soon. And we've even gone for a little while, we went in a little bit of a contra-seasonal pattern in that February and March period where prices were really increasing at a faster rate than they normally do. But the fundamentals, suggest that overall the price for kids should remain high and receive support because we don't have a large supply of kids, and we can kind of see some of the similar forces influencing goat slaughter in that we have fewer goats on the market, and so we're slaughtering a smaller number of head on a monthly basis, and so that also is contributing to those higher prices. In general, lower supply in both the non-traditional lamb and the goat market is leading us to supported prices at a higher level than we've seen historically. And because, again, of what David has discussed in some slaughter of some of our breeding stock, some of our older sheep and goats, we could expect some support in these markets for the next year, if not two, because that biological lag in sheep being bred and turning those lambs around and turning those kids around in time for processing is going to dictate, a little bit of a time lag that's going to make the market and prices a little bit slower to respond and therefore remain high for the next year or two. So positive news for both the non-traditional and the goat market. And I think we should expect some of those increased prices, the supported prices for the next year, if not two. So that's what I've got. You can find all my information here, and I've seen either a bunch of questions or a bunch of comments flying around in the chat. So David, if you want to hop back on, or if anyone has any questions for me, we can start fielding questions here.
Well, thanks, Justin. Appreciate that. It's good information there. I don't know, Robert, if you're able to turn people's mic on or not, but again, if you have a question, throw it in the chat here, and I'm sure these fine gentlemen will be glad to take a stab at it.
Reed, there was a question, and Justin, about will the 2021 harvest push those, and I'm assuming feed costs back down. That's a good question.
Wait, say that one again.
Let's see. Richard asked, wow, will the 21 harvest push those prices back down? And I think he was referring to your corn price chart.
Yeah. So we'll have to see. We're still expecting a pretty small carry out in terms of grain stocks, even if we have what we're expecting to be a record crop at the end of this year. I've only been doing this for about 3 years now, and every year we expect a record corn crop just from trend line yields and increased or stable acreage. But in general, because of reopenings, people ordering corn, and China having huge commitments for grains, we'll probably see those prices depress a little bit. And seasonally, what we expect, right, is that the grain markets spike right around planting time, which we're coming to the end of the planting season now, and they decline through the summer until we get to harvest, because you get closer and closer to harvest, more of that weather uncertainty is liquidated from the market. And as we get closer to knowing how much corn we are guaranteed to have for the next year, prices decline. But I do believe we're still going to be well above corn price that we saw in 2020 and 2019, just because our ending carry out is not expected to be all that high. So lower supply of corn, again, higher price for corn and all other grains.
I think it's interesting too on the corn market side, thinking about reasons for why prices have done what they've done. Our big competitors are Brazil and Argentina for exports of corn and soybeans, and they've had some drought that has cut their crops. And so we become the people with supplies. And as China tries to rebuild their hog herds, our export demand for what we've produced is booming. And you can't say our crop last year was bad, because it wasn't. There was plenty around.
Yeah.
But the loss of supplies from our competitors and just plain booming demands for the stuff is been what's driven those prices higher. So
yes, and Brazil and Argentina typically have a 2-crop corn crop. And so they'll plant a corn crop and run behind with another. And a lot of regions completely lost or had really low yields on that second crop because, as David said, drought in that region. So with us being the 800-pound gorilla in the room for corn, people are coming to us for corn, which is keeping prices elevated, even outside of our own reopening dynamics. And yeah, it's pretty interesting. Feed prices are going to be a barrier to profitability in the livestock market this year. That'd be the only thing that concerns me. Kind of going back to what you said about drought, David, in the West.
So, Justin, David, I have a question on, and I've been getting this from the ag industry here. They've been seeing these goat prices, and they've been above $4 for quite a while now. And we've never seen that. When they got above $3, kind of towards the end of last year, everybody was excited, and then now above $4. Now this last week at producers, I know it's 1 week, it could jump right back, but this last week they gave up almost $1, just a rather sharp decline. My naive thought is there was about twice as many came to the market the week before, and those stocks kind of filled up. But what do you see kind of short term and then maybe a little bit longer term with those I say lightweight, those midweight goat prices, that 40 to 70 pounds?
David made a comment earlier about high prices curing high prices, and that doesn't just apply to the long term, it also applies to the short term. And so I think, and David, you correct me if you disagree, but I think what you said about a flood of goats in the market last week at those pretty, not quite peak prices, but well above $4, induced a lot of people to come. And if you have the same order buyers, the same purchasers, and they filled their orders last week, they don't have the same incentive to purchase if they've got full stocks of what they needed, which if you don't have as many people competing for a product, then yeah, you're going to have a lower price. There's just not as much incentive. David,
No, I'm with you. I find that I think goat price has been pretty interesting for a bunch of years. When they cross $3, that's amazing. Then we hit $4 and, we run out of words to describe it. And, you put some numbers together and all of a sudden those are more profitable than a heck of a lot of other livestock options that are out there. And, but it is interesting to me with those prices. Some of our inventory data and our commercial production data, we're not really growing production as much as I would expect that over time we're going to see some more production because those prices are pretty great. And I just find that whole thing pretty fascinating. Can we produce enough to wreck it? Well, I got a lot of examples in history of where we've done that very thing and everything else. But, it would seem like that we do have some expanding demand too that supports those higher prices.
That's a good point, but I would argue that what it takes to raise goats creates a special creature, and oversupply has traditionally never been a problem.
Exactly. Maybe this is going to be the exception that proves the rule, Reed.
Yeah.
And you wonder, I wonder about, everybody in Texas wants cows, right? Like, and people moving to Texas, they want 10 acres and a couple of cows. And so when prices are super high for calves, or it's expensive to keep calves, people will run to the sale barn. And so there's a little bit more flexibility in supply. I don't know if that makes sense. And so you have more room for increased sales. Whereas if not as many people own goats, and we don't have as many goats, when you reach this, again, really low point of goats, there's just not as many people that can run down to the market and say, or run to the auction and say, I've got goats that I don't really need. I've just got them for a tax exemption or whatever the case is. And so I'm going to sell them because prices are really good. there's just not as much flexibility in the supply. So I think it's a lot different than the cattle market in that way. It kind of going back to that, what y'all were talking about, it's hard to reach an oversupply of goats.
Yeah. So a question has come in is, do you have a cutout chart for slaughter kids? What is the retail price on goat meat?
That's been a shortcoming in our data for a long time. There is a little bit of data that USDA AMS does, but and when I say that, it's some retail price data, but it's really a shortfall in the data we have. We don't have much data to look at some of that in terms of the wholesale market and then the retail market. It's just something we don't have much data on, and we have to sort of rely on just talking to people and what we observe at the stores ourselves, and to kind of get a notion of what's happening.
I paid $2.25 for a cabrito taco last week, and that's about the only data point I've got.
And I think a part of that is gaining an understanding of how that marketplace works. And so I'd encourage folks that are really interested in that to consider coming to the Texas Sheep and Goat Expo. We are going to be having a panel of people that are in the business that buy goats, own harvest plants, or source goats from harvest and deal direct with the consumer, and how that pattern works. And I think because of so much of it is smaller shops, it's not going through our big retail outlets, that there's not food distributors that are nationwide that tend to do goats. So we don't have that reporting mechanisms that make it consistent, and it's smaller in its outlet. And the reason that gap is not there, or that the data gap is there, I guess is what I'm saying. So I do want to make a comment in the chat box. I put a link to a sheep and goat market forecast app. This is something that Bill Thompson and I worked on putting together, that used data out of the San Angelo Producers Livestock Auction. So it doesn't predict the market, but it does help sheep and goat producers determine what's the best weight to sell their lambs or kid goats, depending on when they were born, what their weight is, what the time of year is, and uses those ebbs and flows in the marketplace here. It can't predict the market, but if you use the historical averages, you're better than a wild ass guess, I guess.
Yeah, now
there's a reason our seasonal patterns in prices hold up from year to year, both from a supply standpoint, when lambs are born, when they're sold, and our holiday demands. There's a reason that seasonal pattern exists and recurs all the time. And I think that's pretty useful in tools like that, to really look at, okay, if we look at our seasonal patterns, you got to have a big event to have a counter seasonal move in prices. And so I think there's some really good information there.
Yeah, that app can give you what my predecessor here in Amarillo called an EWAG, an educated wild ass guess.
All right. Any final thoughts? Last chance for questions. I don't see anything else. Am I missing anything in the chat box there, Dr. Anderson? You've done a good job.
No, I think you got them.
Okay. Robert, do you see anything on your end that maybe we're not privy to? Either Robert is not replying, or he's speaking with his mute on.
No, my screen got blocked. I couldn't do it. No, everything looks good on this end, Reed. I'm not saying anything. Appreciate everybody's help. And I think this was good information to get out there on a timely basis. So I think it's good. And I appreciate you promoting the Sheep and Goat Expo. It's going to be a great event, and I hope everybody else gets an opportunity to participate this year. We're looking forward to having everybody here in San Angelo and doing it live, because like Reed said, there's a lot of good information that's provided, and there's lots of good hands-on stuff when you're visiting in a group face-to-face, that these type of discussions can be even better. So thank you.
All right. Well, thanks again. Appreciate everyone taking the time to join. This will be recorded, and we traditionally put them on YouTube, and we have a YouTube channel. So you could go back and look last year's reports in the middle of COVID and see how well we did. Projecting what's going forward.
Don't go look.
Yeah. All right. Well, thanks everybody.
Thank you, Reed.